The question of whether life insurance is halal or haram is a very important one, and one where I think there has been a slew of misinformation published on the topic. In this video, I will clarify the different types of life insurance, and I'm also going to talk about both my opinion on the halalness of life insurance and the financial wisdom of taking out life insurance. Assalamu alaikum, my name is Rakan Kayali and welcome to Practical Islamic Finance. There are two types of life insurance. The first type is known as term life insurance, and this type covers a fixed period of time, for example, 20 years. The second type of life insurance covers your whole life, and it's called permanent life insurance. Now, before I start my analysis of these two types of life insurance, make sure you leave a like so that YouTube can promote the content of this channel more. And subscribe and hit the notification button so that you are notified whenever a new video is uploaded. Additionally, if you're looking for halal funding, check out fundmebff.com. We offer interest-free funding using an income sharing model. Now, going back to life insurance. Let's talk first about permanent life insurance. There are a number of different products that fall into the category of permanent life insurance. Perhaps the most well-known of these products is whole life insurance, and perhaps it's called that because if you buy this type of insurance, you're going to regret it for your whole life. One of the defining attributes of permanent life insurance is that it includes a cash component. So basically, when you make monthly payments towards your permanent life insurance policy, part of your payment is going to cover the insurance premium, and another part of your payment is going to build up a cash component in your policy. And here's why I want you to avoid permanent life insurance like you avoid staring at the sun during a solar eclipse. Number one, the cash component that you build up in your life insurance policy will typically accrue interest, which is haram. Number two, permanent life insurance is around 10 times as expensive as term life insurance for the same amount of payout to your beneficiaries upon your death. So it's 10 times as expensive in order to build up a cash component in your policy. And what many people don't know is that upon your death, that cash component that you build up in your policy, your beneficiaries don't see any of that money. That cash component that you've been building up for all these years goes to the insurance company. So it's a complete ripoff. You're paying 10 times as much as you need to. And for what? For a cash component that goes to your insurance company if you die. If you want to access that cash component before your death, you either have to cancel your insurance policy, in which case they're going to charge you an arm and a leg in fees, and you're going to get back only a fraction of what you paid into the cash component of your policy. Or, get this, the insurance company will lend you money against the value of the cash component in your policy, and it's going to charge you interest on that loan that it lent you, against money that you should have had access to anyway. So I want you to avoid permanent life insurance like you avoid stabbing yourself in the neck with a rusty syringe. Because if you do get permanent life insurance, you may be inclined to do just that. And keep in mind here that the life insurance agents are often incentivized to sell you permanent life insurance because they get a fatter commission when they do so. So if you find yourself in a situation where a life insurance agent is trying to sell you permanent life insurance, I want you to do two things. First, make dua for them. And then second, proceed to gently get them out of your face. Moving on to something called term life insurance. Term life insurance covers a fixed period of time. The way that term life insurance works is that you make monthly payments. These are often referred to as insurance premiums. You pay these premiums every month. And in return, if you die during this period in which you are paying premiums, then the life insurance policy will pay out to beneficiaries that you can name a predetermined amount of money based on the policy that you have with them. This predetermined amount of money is typically referred to as a death benefit. Consider the following example. Let's say you're a 30-year-old engineer, you're married, you have 2 kids, your wife doesn't work, you're the primary breadwinner, you haven't really saved up much, and you want to make sure that in case you die unexpectedly, your wife and 2 kids aren't left distressed financially. So you estimate that you at least need to leave them around $250,000 in order for them to stand on their feet financially in case you were to die unexpectedly. So you take out a term life insurance policy and you make monthly payments towards this policy. And in return, the insurance company promises that in case you die unexpectedly from natural causes, that $250,000 will be paid to your family. The key to ruling on whether or not life insurance is halal or haram is figuring out what type of contract life insurance is. Is it a sale? Is it a money exchange? Is it a loan? Is it an investment? What is it exactly? To answer this question, we should ask ourselves, what motivates the insured to make monthly payments to the insurance company? What is the insured getting out of their monthly payments? Is it true that they only get something in case they die? All else being equal, whose beneficiaries are in a more secure financial position? The beneficiaries of the insured or the beneficiaries of the uninsured? An honest appraisal of the financial security of the beneficiaries of the insured versus the uninsured will clearly favor the beneficiaries of the insured person, even while the insured is still alive. So the value that the insured gets from the life insurance policy isn't zero before they die. Going back to our question, what motivates the insured to make monthly life insurance payments? Clearly, the motivation is to add to the financial security of their beneficiaries. Again, the existence of this added degree of financial security is not contingent on whether or not the insured dies. This added degree of financial security is present even during the insured person's life. So when the insured makes monthly payments, the insurance company receives money and in return makes a legally binding promise to the insured to pay out a death benefit in the event of the insured person dying during the period of their policy. So really, life insurance is a sale. The insurance company is selling their legally binding promise to the insured. The security that the insured gains as a result of this isn't subjective, it's objective. One can objectively say that the beneficiaries of the insured are in a more secure financial position than the beneficiaries of the uninsured, all else being equal. What causes many to fail to recognize life insurance as a sale is the fact that the legally binding promise that the life insurance policy makes to the insured is not a tangible thing. This causes many commentators to only be able to recognize the money flow. They can only see one side receiving money, and that is the insurance company, and the other side sometimes receiving money and most of the time not receiving anything in return. This couldn't be further from the truth, as is evidenced by the fact that when we assess the financial security of the beneficiaries of the insured versus the financial security of the uninsured, we clearly favor the financial security of the beneficiaries of the insured. This is because the risk of unexpected death, although not tangible, is a very real thing. The translation of what Allah subhanahu wa ta'ala says in Surah Luqman, verse number 34 is, and no soul knows what it will earn tomorrow, and no soul knows in what land it will die. Since the risk of a family losing the income of its primary breadwinner due to their unexpected death is a real risk, is it not wise to protect against this risk? Of course it is. Even if you don't die during the term of the life insurance, would you consider your payments to the life insurance company a waste? No. During the period that you were covered, your beneficiaries enjoyed an added layer of financial security. If I buy a car seat for my child and alhamdulillah, I never get into a car accident and the car seat never comes in handy for me, and in retrospect, I could have done without it, do I say that my purchase of that car seat was a waste? No. During that period of time, I protected my child. My purchase of the car seat was a good purchase. It was a wise purchase. I was doing the responsible thing to do. And I should feel gratitude that, alhamdulillah, I didn't get in a car accident and I didn't need the car seat. Similarly, when you are purchasing life insurance, you are getting a legally binding promise from the insurance company through which you are providing protection for your beneficiaries. If you never need this protection, you shouldn't feel like your payments were a waste. Rather, you should feel gratitude that you never needed the protection you purchased. But your purchase of this protection was the wise thing to do, was the responsible thing to do, and you should feel pride that you did that. While I was preparing for this video, I was actually reading a rather long paper arguing for the prohibition of life insurance in Islam. And in that paper, the author literally says, if the person dies within the term of the life insurance, he wins, although he is now dead. I doubt that most people would agree with that. Now that we've identified what life insurance is, let's very quickly go through the three major corruptors of business contracts in Islam, namely riba, maisir, and al-gharar, to see if they are present in a life insurance contract. Let's start with riba. In order for riba to be present, there either has to be a loan, either explicitly or implicitly. Often implicit loans are disguised as sales, and sometimes they're disguised as money transfers. But there has to be a loan of some sort in order for the question of riba to be in play. Now, in the case of life insurance, when the insured is making payments to the insurance company doesn't automatically owe the insured any money. So it's not a loan of money that the insured is making to the insurance company. It is possible that the insured makes a lot of payments to the insurance company and they are not entitled to any money in return in case the event that they are insuring against, in the case of life insurance, the death of the insured. In case this event never materializes during the term of the life insurance, they aren't owed any money. So it's clearly not a loan from the insured's point of view. From the insurance company point of view, when they make a payout to the insured's beneficiaries, they are not expecting their money back. So that's not a loan either. So the question of whether or not there is a loan can be set aside. Now, some people have argued that insurance is in fact a money transfer. Well, this is clearly false, since when a money transfer occurs, each side has the right to receive some amount of money. And if both sides don't receive some amount of money, one of the parties of this exchange is in default. But that's not the case with insurance. With insurance, the insured can make payments, as we mentioned, to the insurance company, never receive a dime from the insurance company, and the insurance company is not in default. So this is not a money exchange. So both the existence of a loan and the existence of a money exchange are clearly not present in the case of life insurance. So it can't be said that riba is a viable suspect. The second major corruptor of business transactions in Islam is something called al-maisir, which is often translated to gambling. The prerequisite for the existence of maisir is that the activity has to create no needed value. And in the case of life insurance, there is clearly needed value that is being had by the insured when they are obtaining life insurance. And so the question of maisir is not in play here either. The third major corruptor of business transactions in Islam is something called al-gharar, which is often translated into deception. In the context of Islamic finance, al-gharar refers to contracts in which the terms of the contract are not defined adequately. Gharar can come in the form of an ill-defined object of sale, or it can come in terms of an ill-defined responsibility for one of the parties. In the case of life insurance, both parties know exactly what they are purchasing, what they are getting in return. As I mentioned, in the case of life insurance, the insurance company is getting the monthly payments from the insured, and the insured is getting the legally binding promise from the insurance company that the insurance company is going to pay out a death benefit, a predetermined amount of money, to their beneficiaries in case of their unexpected death. So there is no gharar here. It's possible to introduce gharar into a life insurance contract, but this is a reflection of the way the contract is written if things are not clarified as they should be. In other words, if the amount of payout is not clarified and defined precisely, if the terms or the conditions that have to be met in order for the payout to happen are not clarified in the contract, that could introduce gharar. So if you are selling term life insurance, then you want to make sure that you're clearly explaining when the life insurance policy pays out to the beneficiaries of the insured and how much it pays out, and make sure that's clearly spelled in the contract in order to avoid any gharar in the life insurance. Now, what about the argument that insurance companies use the money that they collect from the insured to invest in interest-bearing products? First off, you need to understand that when the insured makes a payment to the insurance company, that money that they paid, they got the legally binding promise from the insurance company for that money. And therefore, the money that they paid, it's no longer theirs. They have no claim to it. They have no right to benefit from it. It's exactly like if that person were to buy a phone from Apple, for instance. After buying the phone, you don't have any claim to the money that Apple collected from you. You don't have any right to benefit from that money. Now, to the extent that you hold yourself accountable for what Apple does with your money after you've purchased something from it, it makes sense for you to do the same when you buy insurance from an insurance company. But if you're like most people and you say, well, I bought a phone from Apple, I'm not responsible for how it uses my money after I've made my purchase because it's not my money anymore, then I don't think that you can make a stronger argument for why you should be held accountable for how your insurance company uses the revenues from its sales after you've made a purchase from them. Now, I will admit that the question of our level of responsibility for how our money is used after we've made a purchase from a company or from an individual, for that matter, this question is not an easy question to answer. And it's certainly not a question that I can answer for you. But what I would say is that this question is an entirely separate question from the one that I am attempting to answer in this video, which is whether or not life insurance is halal or haram. And by the way, you should notice Apple keeps billions and billions of dollars in interest-bearing investment vehicles like bonds. But I'm assuming that this is not going to cause you to consider Apple products as haram. And for the same reason, I don't consider life insurance as haram. Some people have argued that commercial life insurance is haram because what gives the insurance company the right to profit from the insurance premiums through investing those insurance premiums? And my answer to that is the insurance company does have every right to benefit from the money that they collected from the sale of their product, which is their legally binding promise. As for the argument that life insurance incentivizes the beneficiaries of the insured to murder the insured, well, you could say the same thing about inheritance. It's possible, but we know that inheritance is not haram, and therefore using this reason to argue that life insurance is haram does not suffice. As for the argument that somehow taking out life insurance is not putting your faith and trust in Allah subhanahu wa ta'ala, well, you could say that about any precautions you take in any context. So wearing a seatbelt is not having faith in Allah, nor is saving money having any faith in Allah, nor is taking a vaccine having any faith in Allah. And basically any precautions that you take mean that you don't have any faith in Allah if you accept this logic. Obviously, this logic is not only erroneous, but it is the antithesis of what the Prophet, peace be upon him, stood for and taught us, and the antithesis of the spirit of Islam and what the Quran and Sunnah teach us to do. The Prophet, peace be upon him, said, "It is better for you to leave your heirs well off than to have them dependent, begging from people." Taking out life insurance is a good way to protect your heirs from being in a position where they have to beg from people and be dependent in case you unexpectedly pass away. In conclusion, I find that there is absolutely no merit to arguments that argue for the prohibition of life insurance in Islam. Term life insurance is a very sensible product for people who don't have enough savings that their dependents can rely upon in case they are to unexpectedly lose their primary breadwinner. I encourage viewers who are in this position where they have dependents who rely on them and rely on their income and don't have enough savings that they can leave behind and have their dependents rely on. I encourage people that are in this position to take out term life insurance. And as I mentioned, but it's worth repeating, stay away from whole life insurance and any type of permanent life insurance like you stay away from a rabid raccoon in the street. Stay away from permanent life insurance. Stick only to term life insurance. It's 1/10 the cost of permanent life insurance for the same exact death benefit. So I hope you found this video beneficial. Until next time, take care of yourself. Assalamu alaikum and peace be upon you all.